All right, good evening, guys. Yesterday, my network on my device was overheating, so I promise today will be better. So, we'll be starting now. So, for yesterday, we talked about technical analysis a little bit. We talked about candlesticks, trends, and all. We talked about candlesticks, trends, and yeah, candlesticks and trend. So we'll be continuing with that a little bit. We'll spend at least 15 minutes on that before we proceed to the major topic for today, which is support and resistance. So starting now, yesterday I was saying something that I said technical analysis is the study of historical price movements. You get to make accurate decision on what the market may do next. That was what I said. And I also said every part of technical analysis is based around price. So even this candlestick chart, the candlestick chart is just a visual representation of price, which is all these things you see here. This green and red candles, those are visual representation of price. Trends are nothing more than higher highs and lower lows. You get prices going up, going down, going up. Those are what trends are. Market structure and even indicators. I will show you guys what indicators are. Those are just formula added to historical price data. So for the major topic today is support and resistance. But before we go into support and resistance, I would like for us to talk a little bit about the candlestick chart and the trending market, which was what we were talking about yesterday. You get, because I said something about candlestick charts being just a visual representation of the market. You get, so what all these candles represent are price movements on each time frame, because I talked about time frame yesterday. So I will break it down for you guys again today. So imagine the red candlestick and the green candlestick. The green candlestick represents what is known as bullish market. You get, bullish represents buy. That is what the green represents. The red represents bearish market and bearish represents sell. Long. On crypto, we call it long. On forex, we call it buy. That is what the bullish market represents. Buy on forex. On crypto, we call it long. So whenever you hear long to sell something, they are telling you to buy. Why for? Wait, let me don't confuse you guys. This is for the bullish, which is the green. The red candlestick is known as bearish candlestick. Bearish candlestick. That is what the red candle is known as, which is sell or short. That is what the red candle represents. Sell or short. The red candlestick is a bearish candle. The green is a bullish candle. So yesterday I gave a brief explanation. This entire structure is known as the body of the candlestick. On each time frame, each candlestick you see there are from like they fully generated on that particular time. Let's say you are on a 1 hour time frame. Every candlestick on the 1 hour, it is actually a 1 hour candlestick. Let me put it like that. On 1 hour candlestick, it will take you 24 of them to just form one daily candlestick. So each candlestick you see on the 1 hour time frame, it takes 1 good hour. You can monitor your time. 1 good hour for that candlestick to generate and fully form the entire body. So these, whenever you look at the candlestick, you see some things like this. These are known as wicks. When you buy candle at home, your candle has wicks. So these are known as wicks. So let me give you a small breakdown on wicks, what wicks are. This is the highest point price reach, and this is the lowest point price reach, and this is the highest point price reach. Same thing here, the lowest point price reach and the highest point price reach. Let me break that down a little bit. So for this, let's assume that the market, let's use live market, opens every single day by 5 a.m. in the morning and closes by 5 p.m. in the evening. And the price of fish for the day when market open, let's go with the bearish market first. The market opened around here, not the week. This, every market of every red candle opens around the bottom, closes around the up. You get? Sorry. So every candle of the red, every red candle opens at the up, closes at the bottom. Let me break that down for you. You see, when the candle opens here, this place is the highest point price got to before market close for the day, and this is the lowest point price got to before market close for the day. Let's assume now the market opened here in the morning 5 a.m. and the price of fish was 600 naira. You get? So price came to this particular direction here for that day. The price of fish went up to 700 naira that same day. You get? Then dropped down to this. Let's say it dropped down to 150 naira for the day. But when the market closed, the price of fish went up a little bit back to 200 naira for the day. You get? So on reverse, every bullish candlestick opens from the bottom, closes at the up. So this is the open of the bullish candlestick, the downside, the up is the close. So let's say the market opens here. The market opens around 200 naira, which is where here closed for the day around 5 p.m. Then the market fell down back to 150 that same day before skyrocketing to 700 naira sales for the day. You get? So before market closed that day, the price of fish fell down back to 600 naira. Then market closed for the day. That is the formula for candlesticks. So on every time frame you go, let me check something. Nice. I was waiting for full TP on that trade. So on every time frame you go, each candlestick you see there, that same analysis I just did for you guys, that is how every candlestick formulates there. You get? So each candlestick you see here, this is a 5 minutes time frame. It will take 5 minutes for each and every candlestick here to formulate. So you might see some weird candlestick that looks like this. You see some really weird candles, tiny body like this, then massive long wick. You get? Or tiny body like this and a massive long wick. That same formula still applies to these candles. Let's say this is a green candle, market opens here, fell down a little bit to this place, then push back upwards. So the market closed at this up here. Price did not go further than this. That is why there is no more extra week. Here, let's say this is a red candlestick. Market opens here, fell down a little bit. Okay, let's say market opens here, went up a little bit to this particular area, then fell down to this level before pushing up here, then closing at this place. That's why you see some weird candlestick like this that looks so thin. You get? So whenever we are talking about bullish or bearish, we are talking about buy or sell. And if you hear something like, oh, they say the trend is bullish, they are telling you the trend is uptrend. Uptrend represents buy market. You get? If you hear the trend is bearish, they are telling you the trend is going down. Downtrend represents sell market. So onto the major topic today. The major topic for today is known as support and resistance. Those are the major topic for today. Support and resistance. Support and resistance. Support and resistance is one of the best. All strategies in trading, all technical analysis strategies are good. But if you can be able to master support and resistance, you'll be good. You'll be able to earn money from, be it forex, crypto, stock market, indices, and all. You get? So what I want you guys to do, master these. Don't lose focus. Concentrate very well so that you can learn what I'm about to teach you. So now, what is a support and what is a resistance? I will give you an explanation from my own understanding. You get? I will break it down from my own understanding. Support. Imagine yourself in a house. You get? Imagine yourself, you are inside the house. You have a ceiling, you have the floor. Imagine yourself as price. You get? If you jump up, automatically your ceiling will repel you down. You get? And once you get to the down, the ground can propel you upwards again. So whenever you jump up, the ceiling is the resistance that will bounce you downwards. You get? While the ground is your support, you will land on top. So let's assume this now. Automatically, we know support can become resistance. Resistance can become support. I will break this down for you. Let me write it out a little bit. Imagine support like this. Support, okay. Resistance is a price ceiling that prevents you from going up. Okay, that prevents price from going up any further. Am I for spelling safe? Well, you guys understand what I'm trying to type, I beg. Oh, sorry. I prevent price from going up any further. Why support? Support is a price floor that prevents price from going down So that is simply support and resistance. Support is the price floor, resistance is the price ceiling. Resistance is, or you can also imagine yourself in a battle. Your enemies are your resistance, your allies are your support. Okay. So like I said support can become resistance, resistance can become support. I will break this down for you. Assume you successfully jump and you break past the ceiling. You fly past the ceiling. Automatically, you will fall back down. But falling back down, you will land on top the ceiling. Then you can start jumping from on top the ceiling upwards. You get? Meaning now the ceiling that was formerly the resistance have become now your support. Same thing. Assume the force of the ceiling hit you so hard, you landed on the floor and you break past the support that was holding you from going down. Automatically, that place will become new resistance. You get? That support, that former support will now become your new resistance. So let's get back to, let me show you a practical example. Let me show you guys a practical example. Let's say this is our ceiling and this is our floor. Why this is price? Whenever price jump upwards, the ceiling will hit the price backwards, back down. Okay, you jump again, you go down. You jump again, and you go down. Just like that. Just like that. Just like that. So I'll show you guys two different ways of trading support and resistance today. So this is how support and resistance looks like. It is simply a price ceiling and a price floor. Price will land on the support, then you jump back up, then hit the resistance, you fall back down. You get? That is how support and resistance is. Let me allow everyone the option to speak. All right. If you want to ask any question, you can unmute your mic and ask the question. But for now, let's proceed with the class. So, and please hope you guys can hear me clearly. I forget to ask.
Yes, yes.
All right. So, like I was saying, I said support can become resistance, resistance can become support. I will give you another clear example, and I will show you how to use it on the live chat. So, on your trading view, let's say price was going something like this, and like this, just like that. Then all of a sudden price went like this. You know, once price break past it, the price will not just keep going. It will fall down. It will fall down back like this. Once you fall down, you, instead of landing downwards, you will land on top this particular place. Then you start jumping from there upwards again. You get? Same thing here. Let's assume, okay, when you land here, the force of this ceiling hit you so hard you broke past your support zone. Automatically you will jump back up. This place will now become your new resistance that will push you back down again. You get? So that is how it is. Whenever price break past a specific area, that particular, the former area will become the new support or resistance. Let me show you guys on a live chart. I need a clearer example so you guys will not get confused. Okay, let's use somewhere here like this as our example. If you can see now, price went up from here, came down, up, down, and like that. Then price broke past this place, as you can see. So I will still give more clearer example, and I will show you guys how I said I'll show you guys two type of ways to use support and resistance. That's what I'm going to show you guys this evening. After the class, you can go and practice them and give me feedback. So if we put this entire region like this now, this entire area is actually known as a resistance area. You get, this is a resistance area. There are different ways of using support and resistance, though you cannot learn everything in one go. You have to keep practicing it in order to master them. That entire area is a resistance area. Whenever price get to that area, price always fall back down. So automatically, whenever price is coming a third time, like around here, you can start looking for a way that, okay, once price gets to this particular ceiling here, I will start selling from that place. Whenever price is on your resistance, you have to look for opportunities to start selling. While whenever price is on your support, you have to look for opportunities to start buying. This is a clearer example. You can see whenever price gets to this place, price always fall back. You can see price will always hit there, fall down, hit there, fall down. When you want to start buying or selling, don't just enter the market, buy and sell like that. Look for clear support and resistance. And this is the funny trick I want to show you guys now. Support and resistance, there's what is known as higher high, higher low whenever following the trend. What I just showed you now is for ranging markets. It is not all the time you see ranging markets. Yesterday I told you guys about trend, but it is not every single time you are going to see a ranging market. So I want to show you guys the major trick you are going to use in making profit. There's what is known as higher high, higher low in the market, lower highs and lower lows. Let me break them down. This will be the major trick you will need. And I'll show you guys on the live chat because it is a lot easier. So this is known as an higher high, higher high, higher high, higher low, higher low. Let me write it out. Then this is known as a higher low. So whenever the market is breaking up, down, that is an higher high, higher low. As long as the new higher low, it is not equal or lower than the former higher low. Like you see here now, this new higher low, it is above this former one. Same thing with this one. Why this is known as a lower high, lower low, lower high, lower low, lower high, lower low. Let me write it out. That is a lower high, and this is a lower low. So whenever the market is doing something like this, there is also, this is known as a break of structure, because there is an impulsive move that causes market to go to the upside. This is where the support and resistance come in. This was formerly our resistance, it will now become support. You get? So whenever you are targeting to say, okay, what I want to do is whenever price breaks structure, I wait for price to come back. You wait for the new higher low, then you take your buy from there to the upside. Don't just buy, you see price just break up, then you buy from around there. No. The moment you buy from around there, price can fall back down to retest this former resistance. You get? The resistance will not just be there like that without price coming to like balance it out. You get? Price will come back to retest it. That's why I said even if you bust past the ceiling, automatically the law of gravity will push you back down and you will land on your ceiling again. You get? Then you can start jumping from on top the ceiling. So once price break past the resistance and go up, you wait for price to come back to that same resistance level. Once price fall back to the resistance level, then you can start taking your buy from that zone. You get? Don't just take your buy the moment price break past the zone. Wait for the retest. That's what we call breakout and retest. This is the major key to using this style of analysis. Just like that. You always, same thing for this side. Whenever price break past the former lower low, wait for price to come back. This is known as support. This is known as resistance, because this was formerly resistance become support. This was our resistance. This is our support now. This was our resistance. This is our support now. Same thing here. This was our support. Price break past it. We come back again. Then start falling again. So you can wait for price to like come back, retest, then you can start selling from here. So let me give you a clearer direction on how this thing looks on the live chart. Let's use somewhere like this now. Let's use this brief, please. You see price gave us something like this. Again. So if we want to take our buy from around this region, this is how we'll do it. We'll wait for price to come back like this, matches here like this, and then take a buy from here. But the market sold from this area. Let me show you a clearer example of what I'm trying to show you so you don't end up mistaking it. Higher high, higher low, higher high, higher low, higher high, higher low. Just like that. If you do it like this, you mark out the higher highs and higher lows like this. This was formerly resistance, becomes support. I can take a buy from there. I can take a buy from here. You see it? I can decide to take a buy from here, take a buy from here, because this was formerly resistance that becomes support. Though it is not easy to just see it like that on the live chart, because live chart is always rough compared to when explaining with drawings. On the live chart is always rough. That's one thing most mentors don't tell you. They'll just make it look easy. The live chart is where the real problem is. Once you are able to master the live chart, that's when you start profiting from the market. So you might not see this thing now that I just showed you on this higher time frame, but automatically what you need to know is, okay, let's say now we know that here now on this higher time frame, market is on an uptrend around this region. You go down to the lower time frame, 30 minutes or 15 minutes, but as newbies, focus more on the 30 minutes and start looking for entry. So support is a price floor, resistance is a price ceiling. As long, like I said, as long as this new higher low is not below this former higher low, you are still clearly on that up trend. You get? So as long as the new higher low is not lower than the former higher low, you are still on an uptrend. The moment market show you something like that, the new higher low break past the former higher low, yes, market will go up a little bit, then start falling down. That is what is known as change of character. Like this now, you can take a buy from here, take a buy from here as well. Even here. So you can start buying from those area. You get? Then what you start doing once you buy from those area, you target something like a 1:2. Let me explain risk reward ratio a little bit. You see something like this, long and short on your trading view. Long and short, that's what they are called. Long and short. This is a long, while this is a short. Once it's upside down, it is a short. You get? This is what you use to target your risk reward ratio to know, okay, I want price to get to so place, then I'm out of the market. You get? You don't need to just buy, no TP, no stop loss, just leave the market like that. Market price can reverse, hit you out, and you've lost all your money. Let me give you small explanation on stop loss and take profit before we proceed with the class, because those are important lessons you need to learn as a beginner trader. Stop loss is just like a backup plan. You get? I'm very sure most of you guys have heard about stop loss, take profit, and all those things. Take profit is like, okay, once price gets to so amount, I'm contented with this amount of money. Let me bounce out on the market to this one. This one do the money I've made for today is enough. That is take profit. You get? So you set it that, okay, whenever price gets to $100, once my profit have reached $100, the market should automatically stop me out. I'm okay with that one. That is known as take profit. Why to me stop loss is known as a backup plan to me. The reason why I said like that, imagine yourself as a businessman. If you are going into business, you will not go with every single money you have. You get? If you have a million naira, you will go in with 100. If you go in with the entire million naira, assume something bad happened, everything is gone. So if you say, okay, I put this entire money like this, but once the 1 million reach 900,000, I'm out, I not do again. You get? Once they reach 900,000, I not do again. Then come out there, carry $100, 100K go at that shona. That is stop loss. You get? So if you are setting stop loss should be something you are willing to risk. That's why if you are about to enter the forex space, it is not easy. Trading space is not easy. You see shaggy. I see shaggy when I start. If I had someone who could give me advice earlier on, I would know all the amount of money I lost before I started gaining money back to back this season. I would have not lost those amount of money. Yeah, you will lose money. That's just the truth. You will lose money. It is not a get rich quick scheme. Because who they learn work, it will take you months before you become profitable and you can start using your handwork to start earning money. Like this now, you are learning work. That's just the thing. So I will tell you, if you are using stop loss, very important. It should be amount you are willing to risk. So you can say, okay, if this $10 go, it not shake me. Now money we are ready to lose. You get? Don't invest your school fees. Don't borrow money to trade. It should be money you have that you are using to trade. Don't risk money or collect school fees or anything to go and trade. Very, very important message I'm giving you guys. It should be money you are willing to risk. You get? So, like I was saying, stop loss is like a backup plan. In case a boss reach here, make dem cancel me out. This one do the money wey I don lost, so do I not want again. I no wan go in with my full money. If I lose reach 900k, or if I lose reach if I lose reach like if I lose 200k from inside the 1 million, or I lose 100k from inside the 1 million, the remaining 800k or 900k, that one do me. I no want that 200k do, or that 100k do. So that is what stop loss is. Take profit is once I make so amount, this one don reach me, ma comot. And be always careful. Don't over leverage, don't over risk. You get, please. So you will not say, okay, the person will put me into trading, he not tell me all this ones. I'm telling you guys. So this is known as short and this is known as long. What they represent is simply you like setting timer. That is what these things are, like timer. If you look at it, there's something written there, risk reward ratio. Risk reward ratio simply, as the name sounds, risk reward ratio. What you are willing to risk to gain. You get? I always target a 1:3, meaning I'm risking 1% of my money to gain 3% of my money. Always do it like that. Or as a beginner, start with 1:2. Once you figure out your edge, you can increase it to 1:5, or 1:50, depending on you. But as a beginner, start with 1:2. Risk 1% of your money, gain 2% of your money, you are good to go. So I will show you how to use it now. Because if you look at my chart, you'll be seeing things like that on my chart. So I will show you how to use it. Let's assume now that this is the area now. We're about to take a buy from this particular area. So we want to target 1:2, so that whenever price gets to that particular 1:2, we'll bounce out from the market. What you do, you place your long position, you adjust the stop loss. This bottom side is the stop loss. The wider it is, the bigger your profits you are willing to, the bigger your capital you are willing to risk. The tighter it is, the smaller the amount you are risking. This is known as, if you look at it, you see risk reward ratio 2:5. That is a 1:2 risk reward ratio. If you set it like this on this your entry zone, once price gets to this place and you set something like this on this place, meaning you are targeting this up here, that whenever price reach here, price should take you out automatically. So depending on your lot size or leverage, that will determine the amount you will be making. So we'll get into lot size, leverage, all those things the more the class progress. So that is how it is. You get, that is how those things work. So once you are able to master these support and resistance, it is a very good strategy. Once you can master it, you will enjoy it. It is a very good strategy. Almost all my students are using this particular strategy perfectly well. So that is how it is. So on our next class, I'll be showing you how, on our next class tomorrow, we'll go a little bit into support and resistance a little bit more. I'll dive into some more details on it. Then we'll proceed into breakouts and retest. Then we'll continue with the class, candlestick, chart patterns. I will show you patterns you'll be able to see in a specific area, that you know, okay, this thing means I should buy from here. This thing means I should sell from this place. You get? So tomorrow class, please be active. There will be more knowledge to share. So I really appreciate you guys for tuning in today and staying to the end. If you don't understand anything, please ask questions. Any question, anything you don't understand, ask question. I am here to answer you guys. Any question?
Yeah, there's question.
All
For
right,
this,
go
sorry for taking you back. You understand? You said
on. All
this
right.
bearish. You say it's selling, right? Is it that when it's red, that's when you should sell? Like,
The red candle represents sellers in the market. It does not automatically mean once you see the red candle you should sell. No, but it represents the presence of sellers in the market, meaning there are a lot of people selling in the market. That is what that
okay,
red represents.
that means like a lot of people trade in that moment.
Yes. And the people that
So
are
that means
trading that
that was
moment are people who
not
are
before.
selling that moment.
Okay, okay, okay.
While
Good
the
to know.
green represents there are a lot of buyers in the market. Let me show you guys
That,
something real quick. Let me show you something real quick. I'll use trend for that for this example now. If you look from this particular region, I'll zoom in to this place. Though you see green, you see red candles, but if you look at it, the green candles are more than the red candles. This simplify what is known as a bullish trend, meaning it is an uptrend. It simplifies that there are more buyers in the market, there are more people that are buying around this area. You get in this particular region. That is what bullish trend means, which is there are more buyers. That's why there are more green candles than red candles. And as you can see, if I zoom in a little bit, you see the market is going up from here. It started going up to this particular place, as you can see. So if the market is falling down like so, let me use somewhere like this. If I zoom in, you see there are more red candles than the green. As you can see, it simplifies. There are more people selling. A lot of people are selling more than they are buying around here. So it simplifies the presence of sellers. Whenever you are seeing large, more red candles, know that that is a bearish market. So the opportunities you'll be looking for are opportunities to sell. You'll be waiting for price to get to specific areas, then you start taking sell from there. So I'll be explaining more tomorrow on support and resistance. I said I will add 2 more days to the program. I'll be explaining more on support and resistance because I would really like for you guys to master this technique. If you master this technique, you might decide not to even go for mentorship program again if you master this technique, because this is one of the best strategies out there in the world. So tomorrow we'll talk about support and resistance again. I will show you how to use it, where to place your trade, and how to use it to execute trade on live accounts tomorrow. So please tune in again tomorrow. If there's any questions, I'm all ears. Please ask right away. Right, it seems like there's no question. So I will see you guys tomorrow. And I'm really glad a lot of you stick to the end. See you guys tomorrow and have a wonderful evening, guys. Tomorrow will be more better than today. There will be more knowledge to learn tomorrow. So have a wonderful evening, guys.